please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Business Lunch. Let's take it straight across to Hpcl Management on the numbers and also the way forward.
So if you see the core GRM, they are $6.74 versus $4.85 last year. So the core GRMs are strong. Now, going forward, I think it should be in that range of around $7 or so. Okay. But it will depend on how the crude prices behave, because if the crude prices are high, the cost of the fuel which the refinery consumes will come higher. Okay. So that impacts the GRM, the refinery. So what level of the crude prices remain, that is one important issue, and how the cracks behave. This is the second issue. And the cracks, as we have seen that, except HSD, the other products, the crack came down. So only HSD was the only product in which the cracks went up. Now it depends on the product mix of the different refineries, that whether the GRM will be favorable because of cracks or not favorable, depending on what is the product mix which you have. And of course the crude prices, because if it is substantially higher crude price, the fuel cost will be higher.
Okay. You spoke about integration of Mrpl with Hpcl. What are the proposals? What is the transaction being discussed upon, and what will be the timeline for it?
No, we are discussing with ONGC. Both companies have yet to take to board the proposals, but we are definitely discussing both the companies to create the values for the two companies and the stakeholders of all the three companies rather, in bringing the synergies. And in that, Mrpl is also an important item which is under discussion. So the exact modalities and the mechanism, it has to be concluded. And once it is concluded, then we will take it to the board for approval, and then there is a process which is to be followed. So let's see if we can conclude something in this financial year, then that will be good. You
did a pause of price revision from April 24 to May 13th, and then there's a surge in both petrol and diesel prices. It is almost over 2 rupees in the past 7-8 days. So for a common person, can you explain why there is increase in the prices and why there was a pause, and how much hit can you take with those pause?
So many times companies also need to see that if the spike is just a momentary spike or it is a sustained spike. If it is a momentary spike, you may decide not to increase it or pass on the full impact, and when it comes down, also temper it down so that there is a stability in the market. But if you see that those spikes are going to be sustained, are there a series of events which are happening where the possibility of containing the price are not there, then you got no choice but to pass on. Okay. So based on that, we decide that whether the prices are held or prices are increased. Now, what we are saying is there is a continuous increase prices, and it is sustaining for a longer time, and on a 15-day average basis, the impact of that increased prices are becoming full impact. That's why the prices are to be passed on. So we need to see the overall basis, how the profitability of the company is maintained. We need to see that how the consumer is able to afford the thing, and he is not put to a inconvenience where if we have a way not to put him to inconvenience. But the third part of it is, we also do not have a wherewithal that if the prices are continuously increasing, not to pass it on, because we don't have any way to absorb anywhere. And in this whole thing, the taxation is also one of the elements, which is of course the government subject. So end price which the product, the consumer pays, is a sum total of all this effect.
Okay. So my last question to you is that government has an option of excise duty cut, or the states can cut their VAT, but what are the other options to bring in relief for consumers? Is there any possibility to cut the dealer's margin, or maybe put a pause there and do a reimbursement, or is there any other formula apart from daily price revision?
See, any formula you work out, you need to see the practicality of implementation also. The major component is the price, the product price per se, international price, and the taxation. Okay. And if we have to give relief, international prices are not your control. Taxation is one of the elements. Of course, the government have to look at their budget also. But these are the three elements which we need to see. We need to ensure that our financial health is there so that we can perform, we can cater to the requirement, we can cater to the increasing need of the country. And we also operate in a commercial space, so we need to maintain the health of the company. That is important for us.
All right, so that was the management of HPCL. Another important development today, and sources do tell our colleague Sapna Das that there is a huge amount of relief coming in, especially for the home buyers, and several changes by way of IBC ordinance that could have been cleared by the cabinet. Let's go straight across to Mrpl, who's joining us with more perspective on this development. Mr. Vakil, so good to have you on CNBC TV18. Of course, this was in the waiting, but what will really change with these particular ordinances, these changes really being brought about and cleared and given a nod by the government as well?
Yeah, thanks a lot. I think, as you said, there are some critical learnings from our first 18 months. So one is on the home buyers, the other is the threshold of 75 was felt to be a bit steep, so to bring it down to 66. Some streamlining in Section 29A. So those were some of the crucial changes.
Right, Mr. Vakil, I'm just looking at one of the relaxations which says that to allow resolution outside the IBC with a 90% COC approval. Will this apply to companies which are already admitted to the NCLT, and will lenders opt to settle outside the NCLT with this 90% vote?
So, we will have to see the language, which I'm sure will be out quite soon in the public domain. But I feel it will certainly be prospective and not retrospective. But yes, you're right. This is also one of the crucial changes because the Supreme Court on 3 occasions had allowed it to be withdrawn. And in the last instance, had even said that some changes should be made so that it doesn't keep coming all the way to the Supreme Court. So this is forthcoming.
So, Mr. Vakil, what kind of an impetus will the deal making really get by way of the relaxation that has been suggested to 29A? Because a lot of ARCs and funds can now come in and also bid for these assets on sale.
Yeah, so what is expected is, the financial institutions, the domestic ones were already exempted. And now it could be that all financial institutions, as you say, there is a need for capital, both domestic and foreign. So they should certainly be exempted from 29. And again, some more streamlining and not making it cash off, so that there could be further players and bidders in the process. But basically, as I said, the learnings got from the 18 months to make the process more efficient and to work quicker.
Right. So, Mr. Vakil, just one more question, because see, lots of changes that are being brought about are relaxation to 29A, as well as the home buyers getting the status of financial creditors, and also some of the relaxations in terms of threshold and settlement outside of IBC. Now, these are the most important bits. But right now, what we are seeing in the inherent IBC cases, they are all stuck. 270-day deadline has been crossed in all of them. Do you think in hindsight, there are more relaxations required which can really help the fruition of these deals as well? And can anything be done on that?
Personally, I don't think so. I don't think, and I was very pleased that the committee also did not look at any, if you're talking about the timeline, I don't think that's a very dangerous way to go, because one of the critical aspects here is the timing, and largely I think the process has worked very well and in an extremely timely manner. Where these are huge cases, billions of dollars, very complex. So where it's going into, NCLT, appellate tribunal, court process, because it's also a new law, which is expected. I mean, that was surely going to happen. And in those instances, the court has stopped the clock, which is also sensible. But that's fine. So you can give that discretion to the courts. I don't think we should mess with the 270.
All right, Mr. Vakil, thanks a lot for joining in and giving us all those details. We will keep coming back to you as and when. We're okay for our markets, but the European markets, our eye goes onto the European screen. We're seeing some cuts come by. Most of the European indices, our country at the low point of the day, and led lower by the Italian index in the periphery, which is down about 1.5%. Political uncertainty weighing in out there. Yesterday, we saw some pullback from the cuts, but then again, we are seeing some bit of declines out there. For our markets though, L&T is at the high point of the day. Along with that, we have M&M2, which is at the high point of the day. Let's move on and talk about the index and the exchanges then. The NSE, they've moved the Bombay High Court against SGX circular. This is on the proposed launch of India futures and options. Yash Jain is here with all the details. Yash.
Well, on May 9th, Indian exchanges barred the foreign exchanges to trade in Indian equity derivatives, and just 2 months later, SGX decided to launch its derivative product, which was India futures and options, where the underlying index was, of course, Nifty 50. It's this chronology of the events which led NSE move Bombay High Court to challenge that very proposed launch from SGX. Now, what we're given to understand is that the Bombay High Court, after hearing the plea from both NSE and SGX under the Section 9 of Arbitration Act, has said that it will pass an order around 2:30 p.m. on 3 most important issues. The first issue out of which would be to decide whether both parties, which is SGX and NSE, will mutually come on the appointment of a mutual arbitrator in the form of Justice Vasifdar. The second point will be to decide the timeline of this arbitration, because that will be very crucial. As you know, SGX has proposed this launch of India futures and options on June 4th. So we'll have to see what is the timeline of this arbitration process. And the third one is whether the Bombay High Court would mandate SGX to put the Bombay High Court injunction order against the company on its website, on its marketing material, as well as the agreements which it will sign with its investors. So yes, these 3 issues are the important points on which we'll expect an order from Bombay High Court. But yes, one thing is for sure, that SGX and NSE are headed towards an ugly turn after 18-year-long partnership which they've had.
All right. Thanks, Yash, for taking us through that development. Of course, it's tough war between the exchanges that's going on. Let's focus on one of the deal developments. It's a large transaction in the consumer space, which is in the making, and multinational firms are really eyeing GSK Consumer Healthcare in India, which is on the block. Now, sources with direct knowledge share with CNBC TV18 that there are 8 non-disclosure agreements that have been signed by the strategics, and some of them are big global names for buying out agreements that have been signed by the strategics, and some of them are big global names for buying out this company, which has 25,000 crore rupees of market cap. So 72% stake is held by GSK Global Company. It is the Indian arm of Global GSK, and that is on sale, which has a market capitalization of 18,000 crore rupees. Some of the names that we have gathered, the 8 NDAs that have been signed, include the global companies like PepsiCo, Nestle, Abbott Nutrition, Kraft Heinz, as well as Mondelez, Danone, and even Unilever. So these are in the fray, but not to forget the Indian FMCG maker ITC is also in the fray. It will be a large transaction, could be worth about $4 billion, Mangalam, the largest that Indian market has seen in the recent times.
Absolutely. And, you know, it is important to know why the company is doing that. It is because to fund that deal that they had with Novartis and Horlicks, that is GSK Consumer's main product. So 90% of their revenues comes from the malt-based beverages, 80% of which comes from Horlicks, and 10% comes from Boost. What do the competitors have? So GSK Cons in the malt food drinks market has 56% market share, which includes Horlicks and Boost. The next one would be Mondelez, which has Bonvita 17%, Heinz 12%, Abbott, which has Pediasure 11%, and Danone, which has Protein X, has 4% share. It'll be very interesting to see what Danone does, primarily because they also exited their dairy business, saying that they will focus on their nutrition business going forward. Low market share, would probably want to keep an eye out on inorganic growth. I'll also watch out for what Nestle does, given they have relaunched Milo back in the country.
It's always good to have so many strategics fighting it out, because the valuation discovery is always on the higher side. So kudos to the seller at this point. Looks like a large transaction. But let's also focus on the top nifty gainer today at State Bank of India, despite huge losses in this quarterly results, the highest that this largest Indian bank has seen. It is really extending gains as the single largest gainer over almost 5%. And Abhishek Kothari is here to tell us what the brokerages make of this and why this gain on that particular counter, Abhishek.
Well, Nisha, brokers remain upbeat on SBI. They believe that the worst in terms of asset quality has been factored in for the bank. So, although despite this fact, they have cut down their FY19 estimate as they believe that provisions can remain on the high side. So, FY19 analysts have cut down their estimates between 10 to 25%, with Phillip Capital going in as much as with a 38% cut. So, analysts believe that SBI is the biggest beneficiary of this NPA resolution cycle, and therefore they maintain their overweight or buy recommendation. However, target price have been declined anywhere between 3 to 20%. So, Kotak Mahindra Bank, Kotak Securities has a target price of 360, Jefferies with a target price of 355, Credit Suisse with a target price of 322, Axis Capital with a target price of 310, and Phillip Capital with a target price of 332. Let's listen into the management as to what they have to say about their results.
25,000 crore is for the corporate. This is the most conservative estimate. And I don't think that even 25,000 crores will slip. But based on my guidance that our gross slippages in the current year will not exceed 2%. So even if I take a worst case scenario that 25,000 crore is NPA and 12 to 15,000 crore is retail NPA, so we are still very much within that guidance. As far as the growth is concerned, right now we have sufficient capital, but our estimate is that we may need around 20,000 crore odd amount.
All right. Meanwhile, getting numbers from CSE, standalone net profit has come in at 292 crores. That compares with the poll of 252 crores. Remember, there was a wide range of expectations by the street. The stock has spiked. The standalone net profit as well as the total income has come in higher than the expectations. We'll try and get an EBITDA, but I'm looking at the segmental revenue. Remember, the power business has shown a revenue of 10,515 crores. That compares with 85,032 crores. 8,532 crores, I beg your pardon. But the retail business, all eyes were on the retail business given the demerger, impending demerger of Spencer's. And out there, the retail business perhaps has shown a revenue growth of 15% this year. 2,302 crores is what the company has done in this quarter in the retail business. That compares with around 2,038 crores. But on the profit before tax, the retail business, the EBITDA is actually a negative 118 crores, which compares with a loss of 67 crores. So there has been a loss, an EBITDA loss in the retail business. We'll keep an eye out on what the store level details have been. But as of now, revenue growth of 15% is something that the street likes. But by and large, the standalone numbers are above estimates, and there was a wide range of estimates. The stock is mildly off the high point of the day.
Have been stable at the current level, still in favor of the advances. Bank Nifty really is the outperformer, but GSPL, that's the stock on my radar, which has seen a sudden downtrend. And take a look at that particular counter, Jindal Steel and Power, and that has JSPL, Jindal Steel and Power is what I'm talking about, and that particular bit has really taken a knock at this point. Let's also move on then to some important political developments. And Congress-backed JDS HD Kumaraswamy will take oath today as the 24th Chief Minister of Karnataka, alongside Parameshwar as the Deputy Chief Minister of the state. The oath-taking ceremony will also see several national leaders mark their presence. Rukmini Rao, our colleague, is right there with all the details. Rukmini, who are expected to be present, and has there been any clarity on seat sharing between Congress and JDS as well?
Well, who would have thought that the state would be seeing two chief ministers being sworn in less than a period of 7 days, and here we are today. HD Kumaraswamy will be sworn in as the 24th chief minister of the state at 4:30, and Congress's Dr. G. Parmeshwar will be sworn in as the deputy chief minister. Also talking about what the cabinet that could look like. In fact, a late night meeting yesterday, the Congress leaders and JDS have kind of come to an agreement in terms of seat sharing, where JDS will be taking close to 12 cabinet berths, and Congress will get 22 seats in the cabinet. But however, the allotment of these seats have been put on hold for the next couple of days, because they don't want any kind of dissatisfied MLA till the floor test really takes place. On the other side, we will also be seeing a galore of top national leaders from various regional parties like Arvind Kejriwal, Mamta Banerjee, Mayawati, Akhilesh Yadav, Tejasvi Yadav, Naveen Patnaik alongside Sonia Gandhi and Rahul Gandhi will be present. But of course, we would be expecting the floor test to either take place on Friday or Saturday, and clarity will emerge once the vote taking is over. Back to you.
All right, thanks a lot for that, Rukmini. We will keep an eye out on that. But let's move on. Even as the anger simmers in Tuticorin after the deaths of 11, Madras High Court puts an interim stay on the expansion of the Sterlite plant. Jude Sandit joins in with more details. Jude?
Well, as you rightly said, the Madras High Court has come down heavily on not just the Tamil Nadu government, but also the proposed expansion plans of Sterlite Copper, which, remember, is the copper-making facility of Vedanta. In passing interim orders a little earlier in the day, the Madurai bench of the Madras High Court stayed the proposed expansion plan of the plant in Tuticorin, which has been in the eye of a storm, with several thousands of protesters staging a protest since the 12th of February for over 100 days now. As you recall, violence erupted yesterday on the 100th day when police had fired upon the thousands of protesters gathered there, killing what is now 12 protesters, even as the death toll number has notched up by one in the last few minutes. In all, over 30 protesters have been injured as well and are recovering in hospital. Several politicians, like accredited politician Kamal Hassan and the DMK's M.K. Stalin, are currently in Tuticorin to visit both the families of the deceased and those injured. So the proposed expansion plans coming to a halt for now, even as the Madurai bench also observing that in the future, the centre must conduct public hearings before handing out environmental licenses. Back to you.
All right, Jude, thanks so much for getting us all those details. And straight to the flashes on our screen. And Fortis shareholders approved the appointment of the 3 independent directors. Remember, the ones which were nominated by the shareholders, essentially Eastbridge Capital as well as Jupiter. On the other hand, it has also approved removal of Brian Tempest as the director and the chair of the board as well. Remember, the 3 directors on the board of Fortis had submitted their resignation even before the extraordinary general meeting. Brian Tempest was the chair of that particular board and will have to also go as well. So that is a good news coming in for Fortis Healthcare. The other show will take it forward. Right now, it's curtains down on Business Lunch. Thanks so much for joining us.